Mwathe with the weekend analysis for November 2nd, 2013. We saw the market as far as the Nasdaq closed down 0.54% for the week. The Dow was up 0.29% for the week. And we also take a look at the S&P 500, which was up 0.11%. So in order for you to understand the rest of the video, I wanted to include an educational video I made for the MACD so that some of the things I'm going to be saying as far as the market analysis is going to make sense. So why don't you let me include that video on the MACD that I made earlier this morning, and then we're going to continue with the market analysis for the weekend. Eric Mwathe here. So as a follow-up to the previous video, just quickly here we talked about the fact that if you're looking to go long a stock, the best time to use the MACD is when the crossovers take place above zero. So if you want to go long a stock, your best chances of a good signal to the upside is a crossover when the MACD crossover takes place above zero. And you really want to avoid crossovers that are taking place below zero if you want to go long. That's generally what we're talking about here. And like I say, we're going to have a couple of videos on this MACD topic so we can bring all these aspects of the MACD together. So if you want to go long, wait for this crossover above zero. It's a better signal. On the same hand, if you want to go short a stock or you want to sell and get out of a stock, your best chances of a successful MACD signal is when the crossover takes place below zero. So you want to sell, you want to go short. Your most powerful crossovers are when the MACDs are crossing over and they were already trading below zero. If you try and short a stock when the MACDs are trading above zero and the crossovers are taking place, that's not your best chances of a good signal. And of course, we touched on the idea that if you want to go long a stock and the MACD is below, or the MACDs are trading below zero, your best chance is to wait for this break of a trend. Like in this instance, this trend break here lower, so this crossover is more successful more often than not because it's breaking a trend on the MACD, so the sell-off is more powerful. The crossover tends to be also more powerful. Same time, if you want to go short a stock, your best chance is to avoid shorting or selling a stock when the MACD crossovers are above zero. But really, if you want to get it right, is you want a trend break to the upside where the MACD really powered ahead this trend, breaking above that line, and so your next crossover is more successful. And that's what we talked about in the previous video. Now in this video, I want to bring on another idea here, and it is, let's say this is a zero line on the MACD. Let's call that the zero line on the MACD. And what I want to bring here is watch out for crossovers that are uniform. In other words, uniform below the line and back above it. So let's say there's a crossover, change the color here. So let's say it does something like that. And so what you get here is uniform activity. It's uniform below the line and back above it. Very nice action. Whenever you get a crossover like this, these ones tend to be absolutely powerful. For some reason, this symmetry tends to give very powerful signals. And the same is true, for example, if you want to trying to get out of a stock and let's say it moves above the zero line and back below it in very uniform action, and see here, and so you have another crossover. What I'm trying to talk about here is if it is uniform activity above and back below the line, they tend to give you better signals. So we're going to use an example here to show that aspect of trading, that uniform activity back above the line or through the line and back above the line gives you a better signal. On the way up, if you have uniform activity down and then up, nice action, that's a bullish signal. If you have uniform activity above the line and back below it, that's a very bearish signal. So we're going to go into some examples here. But before I do that, why don't we talk about another aspect of the MACD? and it sometimes can get confusing, and I want to clear something out here for all of us to kind of grasp, is whenever you have a crossover that looks like that, let's say we draw the next line so we can see what we're talking about. So whenever you have a crossover, and let's say the MACD lines hug each other for a while, see, that's not a crossover. What we're talking about a crossover is when you get that separation. So watch out for the separation. This separation between the line confirms there was a crossover, because sometimes what stocks do, and they confuse us, is you'll see a MACD, you'll see something like that, and let's say for a moment here the MACDs just hug each other, so you don't get any signal. So wait until you see that separation. So this separation between these two lines here is what confirms a crossover, and sometimes it helps you from taking action when there's a weak MACD signal. So let's go to the example. And we have here the Nasdaq weekly chart going back 3 years. Nasdaq weekly, 3 years. And let's go here and take a look at, of course, this market has been steaming ahead over the last 2 years or so. Very nice action. You want to take a look at the MACD crossovers. Crossover above 0 is this area here for a successful move. Crossover above 0, successful move since then. And notice we haven't had any other MACD crossover, bearish or bullish. As you can see here, the MACD never crossed over, because there was no separation to the downside, and here never crossed over to the downside. So there's really never been a sell signal ever since this MACD crossover here. So that's important. I'll take a look at how this MACD, this is very important here, because in the previous video we talked about when the MACD slashes below 0, you get a big washout, just like when it slashed below 0 here. Take a look at this big move here in price. So you really have to be careful. If you are long and the MACD slash below 0, you have to be careful, because that's really suggestive of a big down move. But here, the MACD can play a game, and what you notice is that it's just about to crack, but it held. And the next crossover after it has held this support line here tends to be very powerful, because this was a trap area for anybody who shorted the market, because note that very close to breaking below 0, and then support at the 0 line, and then a crossover coming place with a separation. So this MACD crossover was always going to yield a powerful move. Remember, we are looking at weekly charts, so that was a signal that would have been good for the next couple of weeks and for the next couple of months. So now let's say you wanted to, let's say it was February of 2013. You see that there was a period here where the MACDs were really looking like they were crossing over to the downside. Here, crossing up to the upside. It seemed like it, but there was no good separation. So what we are learning here is, whenever you see this type of action, ignore this, because this is very confusing. So this period here would have been ignored right there, because those crossovers did not have separation. What we are looking for is an obvious separation. We want separation to take place. So that would be a crossover there. But if we find that there's something like it's hugging each other here, we don't call those a crossover. So we ignore such types of signals. And you'd have noticed it would have been obvious here that after this period of confusion here, this market would cross over there. And the crossover was taking place above 0 on the MACD setting. So crossover, nice crossover with a separation here. And that was this entry point here with a breakout in price. So everything was taking place, and that would have been another indication of a strong market, and would have helped investors stay long the market. And you see every subsequent crossover above 0 here, which was this low here, crossover below 0, which should have been this low here. Now I can even say that this most recent crossover here was not the best, because we don't get a very good separation. So, you know, if you go back to crossover plus separation, you see this was a better entry here. Okay, so nice example here on the Nasdaq weekly chart. Let's take a look at another. See, there was a trend. These 2 points make a straight line, so they make a straight line. Continue that line. See that we broke below that trend. So this crossover here, because it was below the trend, was going to be a successful buy signal. And you can see that it's very accurate, because ever since then, this market has not seen these prices and has had a nice run. So that's one way to do that. Also consider the fact that during this crossover here, there was MACD support and then a crossover. So let's say you did not take advantage of this crossover here, you would have been very convinced that this move was going higher, because there was a crossover above zero there after support, and also a move back below zero on the MACD line on that MACD time frame. So remember, these are two MACD settings because I like them to clarify what's going on in terms of market direction. So now here's another good example of how to use the MACD. We see that there was this higher high, and we all know about negative divergence. So it was a higher high and a lower low in the MACD crossover. So because there was a lower low in the MACD technical trading here, the crossover here tends to be a little bit more predictive. That's why we have this move lower. Same time, if you take the other MACD setting, is you have lower MACD highs, and so this crossover here tends to give a better signal to the downside. So that's how you can use the MACD setting. Now, as far as uniformity is concerned, take a look at this. Is we have what seems like a V-type formation, very uniform V-type formation. Hope that makes sense, right? This looks like a V, and it's very uniform because if you draw a line smack in the middle of this, you see that it's almost equal weight on this side and this side. Okay, so that is what I call uniform action. So whenever you see a MACD have uniform action, let's say below a line and back above it, this move back below zero tends to be a buy signal, which is this general area there. Again, you have another uniform activity here, looks like a V. So next time you come back above zero, that is a good entry point. Since I don't want to waste a good example here, is in subsequent videos I'm going to talk about the MACD failed crossover here. So the MACD would cross over here, move higher but stall. So your next, and I'll discuss this in a separate video, is so this node, this high, becomes a level to watch. Is once you break out above that level, that becomes a buy signal. So this would have been a buy signal here, which was also this entry point, very nice entry point. And also notice that you could have used this crossover and attempt to move above zero, failed, moves lower, breaks out. So this was another breakout above that level there. So in a subsequent video, I'll talk about the MACD failing to move higher and then finally crossing above a previous MACD short-term high. So I won't go into detail, but this is a good example of how you can use the MACD after a failed attempt to cross over. But we'll discuss that on another video. Now, let's take a look at the Nasdaq 1-year daily as we continue here with the examples. And without even going into too much detail or research, I see that there was an attempt to move below zero here that failed, and a crossover that took place after that. There was a move above zero here. So this was definitely on the daily a nice entry point. Now you see that there was a break, which would have been a sell signal, but notice how the market made a nice uniform activity back above the line. So it looks like a U-type formation here. Hope you can see that. So this market, the black line has a nice U formation and the brown line has a nice U formation. So that's uniform activity that I talked about. And so any crossover after that and a move back above zero is a good signal. And so that is July. Notice that that was a very nice entry point in the market. Now take a look at the other crossovers since then to to the upside. Crossover above zero tends to be more successful, which is this entry point here. Crossover above zero, which tends to be successful, and yes, it was successful in that time frame also. In fact, if we go back and take a look at all the crossovers above zero, like here, nice entry point there. Crossover above zero here, nice entry point here. Seems very simple, but it is what it is. Also, a crossover here, beginning of the year, was a nice entry point there. So we can use this area above zero to really confirm that any MACD crossover that takes place there to the upside is going to yield good results, especially in a market that is already trending higher. Now remember, we're not considering other factors here. So this example is just MACD. I've stripped off all the other indicators we could use, like the RSI. So we are looking at one indicator, and it still seems like it's giving us good signals. And also, just to bring back the idea I touched on earlier that we will discuss in a separate video, is the idea that you get a crossover here and a short-term breakout there. So above this high node here. So this was also an entry point there, which is September. Nice entry point there. So we have, and every time we have these crossovers, to me the thing that confirms momentum to the upside is you have a crossover and a move above zero here. You get a crossover here and a move above zero there. You get this nice crossover here and a confirmation back above zero there. So momentum to the upside. Same thing here. You get a crossover and a move above zero. So combining those two MACDs gives you a better insight into what is going on as far as the stock's action is concerned. So, and you'll see that even as of right now, we haven't seen any crossover below zero on the main MACD. So there hasn't been any crossover below zero going back more than 1 year. So this market has yet to give us a significant sell signal, and that's why it's been moving higher. So just understanding that a crossover above zero is powerful on the whenever you want to go long. If you're really wanting to short this market, you have to wait for a crossover down the road when the market crosses over to the downside and it is trading below zero. And that's going to come at a lower price point, but the point of it is you're going to get a better sustained signal to the downside. Eric Mwathe, good luck, peace, and blessings. Woo! Now that we've had a chance to take a look at the MACD and how to use it, why don't we go back to the weekend analysis video, and we're going to begin with the Nasdaq. Now in this video, I'm going to cover the major US markets. I'm also going to cover world markets. I think I'll look at one world market, and then we're going to take a look at commodities, your golds, your silvers, and also we're going to take a look at crude oil. And at the very tail end, I'm going to talk about my best stock picks on the breakout front, stocks that are doing well and stocks that are about to break out and explode. And I'm also going to talk about 3 ideas on the short side. So why don't we begin with the current weekly chart for the Nasdaq. You see that the Nasdaq had a nice weekly breakout and still remains above this weekly breakout here. It's first down week in a couple of weeks here. Looks good. If we take a look at the MACD, we see that there's really no reason based on our MACD for us to say that this is a definite sell signal, even though one might argue that we are now, this MACD crossover that could take place is going to take place breaking this trend of this blue line here. So maybe this MACD could be a significant crossover to the downside. We'll see, but as you can see from the other MACD, the main MACD, really no sell signal as far as the Nasdaq is concerned. If we take a look at the Nasdaq daily, you see that it is still holding above this level here, which has been above this channel. So still remains a strong market. For it to begin dropping, it needs to come back to this channel here, which it hasn't done so yet. So the Nasdaq still remains positive. One thing that we had talked about and seems to be taking place is this negative divergence is now starting to put pressure in this market. So we've been making lower lows on the highs there, while markets were making higher price highs. So that negative divergence, I would argue, is one of the reasons why we see this market starting to get tired at current levels. If you take a look at the MACD now, we start seeing that there's probably evidence on the daily here that we might have a significant MACD crossover. Because the market is crossing over, even though it's above zero, it is taking place outside of the wedge formation. So this crossover outside the wedge formation is what we discussed in the educational part, the early part of this video. So this could be a significant crossover and could be telling us the market is going to be poised to go lower in the coming days and weeks based on that crossover of the MACD. If you take a look at the Nasdaq monthly, you'll see that it has had a nice run, and the only way this instrument really starts dropping is down the road, not now, when it breaks below this trend line here. That's the only way it's going to drop, just like this drop came after a break of this trend line here, and also this drop here came after a break of this trend line. So the market has to break this trend line if it is to ever have a significant bear market movement. For now, MACDs are pointing to the upside, so there's no crossover. This market still remains strong on the monthly time frame. If you take a look at the Dow weekly, you see that the Dow has had multiple opportunities of breaking out. It failed here to break out above 15,658, and this week we see that it is also struggling to hold above that level. So as we begin the new week, the new full week of November, we need to watch this 15,658 level so that the market can take out that high. We'll see what happens. For now, seems to be choking around these levels here. That's something of a concern if you're a bull, because good markets tend to break out without any effort, just like we had this breakout here beginning of the year, which was almost very swift, and the market has stayed above those levels since then. Right now, we're looking at a market that is struggling to break out, at least as far as the Dow Transports is concerned. If you take a look at the weekly MACDs, you can see that one could argue that this crossover above zero is strong to the upside, and we also have a breakout of that short-term MACD crossover. So on the weeklies, there's no reason why this market could not eventually break out above this level here based on just momentum. But if it stalls, then we start thinking about downside pressure. For now, we've got the RSI pointing to the upside, we've got MACDs pointing to the upside. This market could conceivably continue pushing higher. As far as the Dow daily is concerned, see that there's been an area here where this market cannot seem to hold above that level, and we seem to have been again twice rejected at that level here, and recently this past week at that level. So for this market to continue steaming ahead, pushing higher, it needs to break out. Right now we haven't seen the breakout, so we can start wondering what that means. Short term, the market needs to take out that high, otherwise eventually after several failures it might start pulling back. If you take a look at the Dow from an RSI daily standpoint, you see that this is an area where we've been expecting resistance based on where it's been stalling lately, and you see we stalled exactly at that level on the daily. So no surprise that the market has stopped going higher for now based on those RSI settings. As we begin a new month here in November, let's watch to see whether the market eventually breaks this line here. This support line is a very serious support line because it connects to the lows of 09. If the market breaks that line down the road, that's going to be a serious sell signal, just like this break here in late 07. This break here was this high, and we had the crash of 2008. So we need to watch this blue line here that I'm drawing here. If the market breaks that on the RSI for the monthly chart, that could suggest a market in deep trouble going into 2014. Let's take a look at transports from a weekly standpoint, and we see that the transports still holding above breakout levels there. So I don't have anything negative to say about this chart. it continues being strong, and there's honestly, even on the MACDs, there's no reason to say that this is a market that is about to sell off, just because everything is pointing higher and momentum continues to be to the upside. So strong market, there's nothing wrong with a good market, because that means that ideas to the upside are working. If you take a look at the transports daily, the breakout level was here. We've held above that. We've held above that for more than 3-4 weeks. That's a very strong market. So, this could be telling us that the market is healthy despite some parts of the market looking a little bit questionable. Now, on the daily RSI, I was expecting resistance here at this level, which was somewhere around here. I was expecting resistance here. The market took that level out, and you see what's going on is we broke out about this line here, came back, and we seem to be finding support back at this line here. So unless this market can move back below this line, I think this one is healthy. It's way above the 50. Man, this is a market even way above the 13-day moving average. A very strong market that could continue pushing higher as we go into the early part of November. Now, if you take a look at the MACDs, based on the things we were learning about here, one might question this crossover which has taken place outside the range. So this could be a serious crossover, and if we get a crossover here which is outside this trend here, this crossover is meaningful if it takes place. And if we get a crossover here, I would suggest it's going to give us a current short-term high in the market. So if these crossovers take place, I would suspect that this market is going to have seen highs as far as the short-term trading for the market is concerned. I look at the transports from a monthly view. I think I was just showing you how strong this market is. So you see that we are breaking out here to all-time highs on the MACD, which is very powerful. Breaking out to all-time highs on the MACD, very powerful there. Could also be showing that we are really extended. So that's one way to look at it. Strong market. At the same time, it looks very extended from a monthly standpoint. S&P 500 weekly, after breaking out above 1709, we've had almost 3 straight weeks of positive closes. That's a very strong market for you. And there's really nothing you can say that is negative on the weekly. Momentum continues to be on the upside. If we take a look at the daily, you see that, I was expecting resistance just because the MACD, the RSI, on the daily has been stalling at this level here. And we seem to have, just kind of hit a rough patch the last couple of days because we've been contending with this RSI level where resistance has been taking place on that level there. So, this could be where we start getting this eventual pullback, because every time we hit this level previously here, we did get short-term pullbacks, and also here we got short-term pullbacks. So this could also be where eventually we start seeing the market moving lower. Before I forget, let me take you back to the Dow weekly chart. It's Dow weekly chart. The Dow hourly chart, sorry. Dow hourly, and notice that this level here, this line has been resistance on the Dow hourly chart. So we were unable to hold that level there once, and we had this drop here. And so we were rejected again precisely at that level. We could see this drop in the coming days. I think eventually we might see that drop, just because that resistance level has not been very good for the market. Every time it stalls, we seem to have been getting a pullback. Even the last time we hit that level there, we saw this market pull back here. So on the hourly short-term levels, we see that the market showing signs of wanting to go lower. If we take a look at the S&P 500 monthly chart, we see that it needs to hold above this RSI lows on the monthly. It needs to hold above this RSI lows, because if it breaks down, that's going to lead to me, a serious pullback. The last time we broke such a major multi-year trend line was this break here, and that corresponds to the highs of 2007. So we have to be very careful with a break that RSI monthly low line. Very serious. If we break that, we have to be very defensive